I want everybody ready for the next Bitcoin big crash, because the markets, while we might be maturing as a market with more and more institutional investors, remember, there are certain things that institutions and corporations bring with them that we haven't seen in the dynamics of the past. So while everybody will give you the bull case, I want you prepared for the bear case. And I want to also let you know why the bear market is in fact the most exciting time in Bitcoin for those that understand and know what they're doing. And no, this is not about me teaching you how to short the markets and time the markets and pick the top perfectly because you've done your trading and your technical analysis and the RSI and MACD are lining up and we're going through a descending wedge triangle. I've done all the trading stuff. I used to be a professional trader on the trading floor at the London Stock Exchange for alternative investment market stocks. And I know firsthand from experience that 90% of those people lose money at the expense of the 10% of insiders. And technical analysis just gives you a trading strategy that is normally combined with risk management and psychology. But most technical analysis, apart from giving you a framework, is useless at predicting the market. It's just a mechanism for taking the emotions of fear and greed and putting it into repeatable patterns. But those that try and pick the tops and the bottoms fail all the time. You might get it right once, you might get it right twice, but they'll never tell you about the times they get it wrong. And they're very rarely trading against it as well, because those people are the ones that always end up losing their. Most people, almost all of the people involved in crypto, they try to trade the Bitcoin, they try to pick the tops, they try to call the bottoms. They end up doing the exact opposite, especially the newbies of you out there. The newbies often say, I'm not getting involved in Bitcoin until they hit a capitulation point where it reaches close to what might be the all-time high of a cycle. And then they end up being on the wrong side of the crash because they had no long-term perspective. They had all sorts of fears in there. They listen to the news and they end up capitulating at the bottom and getting rid of a bunch of Bitcoin that then goes to the insiders and those that are manipulating the markets, because there's lots of price manipulation in the short term by insiders, and investors don't need to worry about any of that stuff. And just so we're clear, traders are those who try and make a quick buy by buying and selling, calling the top, calling the bottom, or picking their chunk out of the market. Investors are people that take a long-term perspective and ride out the markets. And so I'd like to give you the perspective of what I've done during these bear markets, because inevitably Bitcoin will go through, at the moment it's going through its hype cycle, but it will go through its FUD cycles and it will scare the shit out of a lot of people. So expect it. And what will happen when Bitcoin starts crashing? New dynamics. So corporations and institutional investors are involved in Bitcoin on a scale that we've never seen before. But with longer term corporate and institutional investors, we do not know what their behavior will be when markets crash big time. Now, also remember, a lot of people have locked up their Bitcoin in loans, which means that when those loans get on the wrong side, so if you are lending your Bitcoin and you have collateralized, for example, maybe you've got 150% of the Bitcoin, and you've borrowed some of that Bitcoin or cryptocurrency or whatever it may be, then when the market crashes by over 50%, I say when because it inevitably does happen, then you get all of those people that end up having to sell their Bitcoin, even though they never wanted to, just simply because of the nature of the product and the collateral that we're in right now. That creates taxable events for those people that may have been borrowing. So if you are borrowing against your crypto, just something to be aware of, but that also creates some forced dynamics in the market where the crypto lending platforms may have to liquidate many of that collateral. Also, the difference in the markets that we're in now that we haven't been in before is institutional and corporations. And we're not sure at this stage, while everyone will tell you the bull case, and I believe in the bull case, I also want to give you the realism, because I believe that there's power in being prepared so that you are unshakable about what comes next, because I've seen it many, many times. But here's the new dynamics. Institutions and corporations will have risk management strategies. And those risk management strategies will say that they may need to either rebalance their portfolio after a significant crash, and which means that they may end up buying the dips, or they may have a risk management strategy which forces them to liquidate that Bitcoin, and we don't know how they're going to behave, because this may be their first bear market that they experience when it comes. Now, this isn't the video where I'm going to say on July the 36th, our technical indicator says that we're hitting into a falling wedge, and therefore everybody should sell when it hits this Fibonacci ratio based upon an Elliott wave analysis, because the MACD and the RSI are going into some descending triangle. You can watch as many of those videos as you want, but they'll only encourage you to be a trader, create taxable events, get everything wrong, lose your shirt, and not be on the right side of the investment trend, and more importantly, take advantage of the bear markets. The bear markets are the most interesting time to be purchasing and investing in Bitcoin. So what do I do in bear markets? Well, I do nothing different in the bull market than what I do in the bear market. So when the great Bitcoin crash comes along, which I can't wait for, while everybody is depressed, while everybody is, getting rid of their Bitcoin, I'll be doing exactly the same, but by dollar cost averaging in and ignoring the price, you get to buy it all the way down at cheaper prices. Dollar cost averaging in a continual bull market is not a good strategy. You need corrections and you need crashes in order to accumulate more Bitcoin at the expense of the fudsters, at the people that don't have the strong hands, and the people that were just here to make a quick buck, listening to traders, listening to YouTube videos telling you when you need to buy, when you need to sell. The smart investors, the people that I know that are now billionaires, the people that have made life-changing amounts of wealth, they've accumulated during dips. Now, I don't even change how much I accumulate during Bitcoin crashes. Just stick to the same thing and you get cheaper and cheaper prices. If you try and increase it when your markets are going down or markets going up, you can do some interesting strategies around that. But I like just keep it simple.